has the urgency changed since you and your fellow CEOs and leaders wrote that letter just a little over a week ago?
Well, there's a reason the markets are starting to react. You can see the credit default swap spreads are changing, and there's plenty of indicators out there. So it's gotten more urgent. It just so happens and recognize we own a bunch of technology companies who had our annual meeting this week. So all of our companies were in, all of our investors were in. And normally you talk about technology changes, valuation, operational improvements, and now we have to talk about this. We just went through a banking crisis, wondering, kind of cost of credit. We had some SVB problems in FRB. We solved those, and now we have to deal with this. Will your cost of capital be higher in 6 months, in 3 months, in a month that you know about? So the planning aspect of this is wreaking havoc on people, and so the uncertainty is the thing that people don't like dealing with right now.
There are many EV companies globally now, and several people believe that one, if not more of these companies will one day overtake the market from Tesla. Find out what analysts have to say.
So if you take a look at the way that it stacks up to those guys, what exactly then does that say about the future for Tesla versus a GM or a Ford or a Volkswagen who have grand EV ambitions of their own?
I think all of the OEMs, the major manufacturers, are actually doing pretty well. And we can talk about a 62, we can talk about 69, 65, where a lot of the major manufacturers are congregating ratings-wise. And those are low-risk ratings. Over 90% of companies that have failed in the last 20 years have been rated 40 and below. So the companies that are rated 60 are actually really quite strong. What Tesla has that others don't is the ability to experiment with things like pricing, and you're seeing that now. And that's a way to capture market share at a time when many people are afraid to buy new cars because they've become so expensive. So you've got a perfect storm in autos, like a lot of other industries, where you've got high inflation, you've got recessionary concerns, you've got the move to EV, which can provide even more costs and embed more costs, and you've got supply chain challenges. So all of those kind of wrapped together in Tesla's.
Over the past 10 years, Tesla stock has accumulated gains of 8,535% compared to 348.9% and 187.6% returns produced by the Nasdaq 100 and the S&P 500 index, respectively, during that same period. This means that the car company's share value has grown at a compounded annual growth rate of 56.8%. An impressive return that hasn't necessarily come without its hiccups along the way. Tesla hit all-time highs in November 2021, and that was at $414.50 a share. But changes in the macroeconomic backdrop led to a significant decline in its stock value after that, as investors adopted a risk-off attitude due to the US Federal Reserve's increasingly hawkish actions. The stock has been in a series of upward and downward trends since then, and many are starting to wonder if Tesla is really a good company to invest in. Hello, and welcome back to Tesla Tomorrow. Tesla's fundamentals are perhaps the first thing to consider when drafting a Tesla stock forecast. This always includes an analysis of the demand for EVs in multiple corners of the world, primarily in the locations where Tesla is already offering its products, but also in markets where the company may be planning to reach soon. Tesla is considered a good company to invest in for several reasons. First, its leadership and vision, as well as its electric vehicle market. Tesla is led by Elon Musk, who has a track record of success with other ventures like SpaceX and PayPal. His leadership, as well as his ability to disrupt industries, has garnered significant investor confidence over the years. Tesla is also a pioneer in the EV market. With the increasing global focus on sustainability and reducing carbon emissions, the demands for EVs are expected to rise significantly over the coming years. And Tesla is well positioned to benefit from this trend due to its strong brand recognition and leading market share. How will this happen? We're about to find out. But before we start, if you like this type of content, hit that like button, subscribe to the channel, and turn on notifications to keep up to date with everything happening with Tesla. During the first 9 months of 2022, Tesla produced total revenues of $57.1 billion, majority of which came from the sale of its vehicles. During this same period, Tesla produced a total of 929,910 vehicles and delivered 908,573 units. Tesla has made significant advancements in electric vehicle technology, including battery technology, autonomous driving capabilities, and charging infrastructure. These technological advantages give Tesla a competitive edge in the market and help differentiate its products from traditional automakers. The car company has noted that its focus on continuous products and improvements have taken place through original engineering and manufacturing processes that have further optimized its ability to make the best product and industry-leading one at great costs. As Tesla exits what has been a turbulent year of supply chain disruptions, there has been a normalization of some of the cost inflation, giving the automaker the confidence to pass these through to its customers. Tesla has been rapidly expanding its production capabilities to meet the growing demand for its vehicles. The company has built and operates gigafactories in the United States, China, and Germany, allowing it to scale up production and improve cost efficiencies. This expansion enables Tesla to increase its market share and potentially achieve economies of scale. In 2022, UBS analysts argued that looking forward, Tesla has an edge over other players when it comes to sourcing critical components like semiconductors and batteries. UBS thinks batteries will be the next industry-wide bottleneck, and that Tesla will outperform rivals by building cells in-house and maintaining better access to raw materials like lithium. The investment bank further stated that Elon Musk's structurally superior supply chain will allow Tesla to grow faster and more profitable than other legacy automakers. Tesla recently raised its capital expenditure forecast for 2023 as the automaker ramps up output at its factories to take advantage of the rising interest in electric vehicles. The automaker said in a filing that it expects to spend between $7 and $9 billion this year, higher than its previous outlook of $6 to $8 billion. It does, however, maintain the spending outlook for the next 2 years at $7 to $9 billion. In January, Tesla earmarked $3.6 billion to expand its Nevada Gigafactory complex, where the car company will mass-produce its long-delayed semi-truck and build a plant for the 4680 cell. This 4680 cell is expected to be able to make enough batteries for 2 million light-duty vehicles annually. Tesla is also ramping up output at its factories in Berlin and Austin, and plans to open a gigafactory in Mexico as the EV maker pushes to expand its global output. It has also been previously reported that Tesla begun producing a version of the Model Y in Shanghai to be sold in Canada this year. This is the first time Tesla cars will ship to North America from China. In addition to manufacturing electric vehicles, Tesla also has diversified into the energy sector. The company produces and sells energy storage solutions like the Powerwall and Powerpack, which are used for residential and commercial applications. Tesla's energy division offers potential growth opportunities and further diversification beyond the automotive industry. Other variables that could shape the Tesla stock price in a few years include macroeconomic factors, such as interest rates, as higher rates will typically lead to lower equity valuations. In addition, higher rates may also depress the demand for vehicles, as borrowing costs will tend to increase. Tesla has enjoyed stellar margins of more than 20% on its EVs, but is also facing increased competition from other EV specialists like BYD. Its multiple price cuts in the US, China, and Australia have also been about protecting its own market share, as putting pressure on its rival car makers is really important. However, while the competition keeps mounting, Tesla stands out from other automakers for a plethora of reasons. Musk told investors during Tesla's Q1 earnings call that the company could sell its electric cars at a zero profit and make money on autopilot technology. According to him, Tesla is in a uniquely strong strategic position because it's the only car company that is making cars that it could technically sell for zero profit for now and then yield tremendous revenue in the future through autonomy. This is something that no other car company will be able to reach. Tesla has cultivated a strong brand image and a passionate and loyal customer base. Its vehicles are known for their performance, range, and cutting-edge features. This company has a strong following among tech enthusiasts, environmentalists, and early adopters, which contributes to its competitive advantage and market appeal. By analyzing these elements, investors may be able to determine how much Tesla could bring in sales, cash flow, and earnings in the next 5 to 10 years, in order to value the business by using price-to-earnings ratios and other similar techniques. It is important to note that investing in any company carries risks, and past performance is not indicative of future results. Therefore, before making any investment decisions, it is important to conduct thorough research, assess your own risk tolerance, and consider seeking advice from financial professionals. Additionally, investors should also look at the competition and what a car company is doing to see if there are vehicles which may eat up a portion of Tesla's pie. According to data from S&P Global, Tesla's vehicles accounted for 65% of the total unit sales of electric cars in the US in the first 9 months of 2022. This is a solid record, and it would take a lot for any car company to beat that. But what do you think? Let us know down below, and don't forget to let us know what your valuation of Tesla is. And if you want to know what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.